In our previous lesson, we looked at the impulsion phases of a trend. In this lesson, we'll talk about the correction phases. The correction phases are what we find between the impulsions. This can be described as the reversion to the mean or the intermediate values between impulsions. This represents consolidation in the market where supply and demand are approaching a balance or equilibrium. Corrections can be described as a pullback from the primary impulsion direction. In an uptrend, correction phases are the down and sideways movements. And in a downtrend, the correction phases are the up and sideways movements. Correction phases are typically slower and cover less price movement. They can be very choppy or zigzaggy, and a lot of time is eaten up by these corrections. If you're a good range trader, which we'll go over later, you'll find this is where you can make a lot of trades for short distances. As we begin tying all of this together, we can follow the series of impulsions and corrections in what's called a swing trade manner, and we can ride the trend through the phases for larger profits and a better reward to risk ratio. Now, we've already looked at the impulsion phases in our example, which were the steepest movements in price. In between the impulsions, that's where we will find the corrections. Now, if you take a look at these two examples here and the example on the right, notice within the correction phases, the candles tend to be multicolored with choppy, sideways, or corrective activity in nature. Most of the candles in an impulsion phase tend to be one color with strong conviction to either the up or the downside. It is the combination of impulsion and correction phases that give us the key characteristics of a trend. As traders, we want to enter the trade just at the last moment before the correction turns back into an impulsion. We must learn to gauge the market to identify the trend and join the trade during a correction just before the next impulsion begins. We will be moving into the mechanics of that technique and the strategy to that technique in coming videos. Understanding these differences will help us time the markets better when we combine this information with supply and demand zones. Before you move on, review and memorize the terminology associated with the correction phase of a trend. Go to any chart in your preferred trading platform and practice identifying the correction phases in an uptrend and practice identifying the correction phases in a downtrend. Hope to see you in the next video.